Hi, and welcome to Market Conversations. Just want to do a quick video on Alibaba, but before I continue, just want to let you know that I'm not a financial advisor. This is just for entertainment purposes only. Baba was down over 1% today, and it's been selling off for the last few days. Take a quick look at a 9 months daily chart. So you can see that it hit a high of 105. This was back in March. It's trying to fill this gap. So with Alibaba, most gaps have been filled. You can see back in January, it rallied all the way to 121 and sold off. So a lot of people lost from this sell-off. And it did hit a low of $58 sales back last year. Hopefully we don't see that low again. The sell-off creates a great opportunity for long-term investors. But just remember, Alibaba does have a lot of risk. Political risk. A lot of people thought Alibaba would go to $300. But guess what? It is still under 100. Right now, all calls, all puts are fairly inexpensive, and that is because the VIX, the volatility is low. So we take a quick look at these options. So we have the weekly options that expired today. We can see a lot of people bought the 90 strike calls and the 100 strike calls. So if we go to next week, we can see that a lot of people are buying the 95 strike calls, which are only going for $44. And we have 100 strike calls, 3,500 volume traded, almost 8,000 open interest. So if you're planning to buy options or puts, I would just probably go further out in time. They're not much more. So I'm thinking about getting some June or July calls. So we can take a look here. We can see that the 110 strike, there's 10,000 volume traded just today, 23,000 open interest, and they're only going for $114. So a month ago, before the rally, it was going for $200, and that's because of the VIX. The VIX has crashed from 19 all the way to below 17. I think volatility is going to start going up in the next couple of weeks because it's going to be a lot of tech earnings. So if you take a look at the July, they're also fairly inexpensive. You can see that a lot of people are buying the 120 and the 130. They're going for $100 and $63. So I might grab some of the 120 strike calls. And if we take a look at the news here, we have, this was April 21. It said Nextplat signs merchant sourcing agreement with Alibaba Group, launches new e-commerce program to provide American businesses easy access to Chinese consumer markets. And then we also have this. It says, what's going on with Alibaba shares? So why is it going down? Because there's weakness driven by tensions over Taiwan. And then we have, let's see, what are Wells betting on? If we take a look down here, we can see that the Wells are bullish trades and neutral. They have the June 16th for the 90 strike and the 120 strike. And then what are the experts saying? So we have one analyst downgraded its action to buy with a price target of 155. So you can see Alibaba is below 100. So there's still room for it to go up to 155. And then we have HSBC decided to maintain their buy rating on Alibaba, which currently sits at a price target of 143. So let me know in the comments if you're buying more Alibaba shares, options, and hopefully we can all make money on Alibaba. I'm still trying to recover my losses from a couple of years ago. So with Alibaba, I think I'm down over $80,000. Got to be patient with Alibaba. I believe it's a strong company, but it is a Chinese stock. So thanks for watching.